Welcome back. Today is 16th of August and right now is 10:30 p.m. Eastern Standard Time, and that will be 17th of August on a Wednesday at 10:30 a.m. Singapore time. Welcome back. So excited to see all of you once again, and not too sure who really made it on the much more earlier Wednesday morning. And I'm going to switch over to our live chat, and welcome to all of our YouTube members as well. Let me type inside here. Welcome back. Wow. How many of you are in the house? Here we go. Ryan Wong, you're first. You're first to be in the house. Thank you very much. And I want to give acknowledgement to our YouTube members as well. Hiram, I think you're in the same time zone as me. You made it. Christopher, welcome back. And I see new members, Fahi and Calvin. Good to see you. Yes, so excited to see all of you back. Daniel, Boki, Eldin, our YouTube member, Gerald, Jeffrey, and of course, Hiram, as well as Kelvin. Wow, so many of you are tuning in. I'm surprised. You guys were pretty early. Now, yesterday I was supposed to do a live stream, and I hope I finally recovered from, the jet lag. We went out to celebrate one of the classmates' birthday, and by the time I returned back to my room and kind of lie down on the bed, boom, I was knocked out. The next thing I wake up to, oh my gosh, 5 a.m. in the morning. So sometimes it happens, all right? Murphy Law happens. So we missed a session yesterday. My sincere apologies, but I really excited to see all of you back in action. Now, today is pretty important day because it's the full release of the Q2 insider trading data. And I want to give you guys a quick update on that. More importantly, there's so many games to play, and typically, on the day when the data is being released, we'll do what we call the trade through the night, all right? And I'll typically fire off like 20 different trades on this day itself, as in today, all right? So, of course, we're not going to do that live on the YouTube. We're going to take a look at what the market is telling us. And of course, most importantly, I'll fire off some trades for those of you who are part of Don't Stop Believing Trades notification. So I'm really excited to be back here. And before we start off our sharing for today, I got a lot of things to talk to you about. Right now we are officially like day 2 of my class at Harvard Business School, and today there was a teaching that really kind of underpinned my thinking about how do you go about preparing yourself to become a millionaire, right? I'm in the subject of wealth, in the subject of making money, and just being straight and not being blunt, but being thoughtful. I'll be covering that in my upcoming new book as well. There are 3 important ingredients, and today I got a moment of epiphany whereby the 3 important ingredients I'm going to talk about, actually they add up. Each of them add up, and finally they will have an equal sign that will lead to the final keyword. That I got a keyword today out of the training at the Harvard Business School class. All right, so I'm really excited to share with all of you, and I want to make sure you capture the essence. So I call it the 3 P's. Number 1, we must have sufficient, in fact, not just sufficient, more than sufficient preparation. So the first keyword is preparation. So everything that we do right now, we are like studying the market every day. Every single day we fire off minimum 1 trade. It's all preparation. And in fact, the moment we dive into Master the Wealth Trilogy, it is a preparation to predict the next instrument of wealth by the time my son grows up to around the age of 25, 26. All right, that's about 10 years from now, 2032. So preparation is very important. Step 1. Then step 2, the second keyword that will kick in is called perseverance. Because in the midst of your preparation, you go through this journey, you're going to be faced with so many distractions. Distractions in your personal life, in your career, in your business, or simply you got distracted. You decided to go to the dark side after watching some gimmicky ads out there. Right? So the question of perseverance means you can really last through the ups and downs in the marketplace and remain focused and remain loyal to your calling in the market. And number 3, because once you pass through the phase of preparation, the phase of perseverance, then and only then you can cultivate what we call passion. Do you have sufficient passion to talk, breathe, and articulate every single day about this market that you are in love with? That is the kind of passion I'm looking for. Regardless of the ups, regardless of the downs, regardless of the sideways, you are constantly in love with this market. Because why? Passion means you're passionately pursuing wisdom. Now, if you are pursuing money just as a pure mercenary out there in the marketplace, sorry, you will get killed at step 3, which is you will lose passion. Because money cannot buy you happiness. Money can buy us time, but money cannot buy you happiness. And I want money to buy me time. I want to watch my 3 boys grow up. I want to see them settle down. I want to see them becoming millionaires. I want to see them pursue happiness. Now that is what money can do for us. So we got preparation, we got perseverance, and we got passion. 3 of them, they add up, equals to the final word that I received today in my class at Harvard Business School. Wow. What is this? What is this final word? And the final word equals to potential. What is your true potential? Now, potential can be measured quantitatively. We always go right up at the top of the wealth pyramid. We define that as $1 million cash. Thereby, you are declared a millionaire. But you can also measure potential qualitatively. And this is a mega breakthrough for me. The qualitative measure of our potential is how much positive influence do we have around the people we surround ourselves with. This is the highest calling of potential. And perhaps this final culmination of me understanding this word potential kind of explain why every time I could just shamelessly pray for every one of you in my class, each of my class, all of my classes, and I think of course I'm fulfilling my potential for a higher calling. You ask me what is that? I got no idea. I just know for the fact that, I have not hit my highest maximum potential yet, right? So this is the part I thought it is interesting. I want to take this time to share with all of you, and thereby is so important. So here we go. We got quite a number of things to cover with you, and of course many important subjects. So a big welcome to those of you who are our YouTube members, and we will know you are a YouTube member because I can see the Captain America shield next to your name, all right? And I can see that very clearly. Those of you who are not our YouTube members yet, please buy your teacher a cup of coffee that's less than $3, all right? You can simply click on the join button on our YouTube channel page, youtube.com/spiking. Now, before we get started, and I want to spend more time with you today, and make sure we have covered some of our real routine, all right? So while I'm speaking, as somebody asked here in the chat, Doctor, may I know, are you millionaire? Somebody posted here. Maybe the rest of my students, can you please reply to this guy called Chin Chan or Chan Chin? I'm not too sure is it first name, last name, or last name, first name. So I'm not being rude on anything, because Facebook sometimes it kind of messed up the first name and the last name, all right? So what do you think? Whether I'm a millionaire or not? Right? And whether am I a millionaire? Is that important to you or not? Right? So, when you spend some sufficient time here at the campus, you start to speak in a very philosophical manner because you really hang out with the most learned professors on planet Earth. And I mean, day one, my mind was already blown apart. Day one, I got such a big breakthrough in my thinking. And, I realized that, I could become a much better CEO, much better manager. And of course, many things I could have done. All right. So, yeah. So I think what's more important for this student called Chan, I don't think you're my student yet. All right. So I think what's really important is, can you learn something from me today? All right. And I kind of want to transform the way I have a positive influence in this world. I make sure that every conversation I have with you, you're going to be edified, you're going to be equipped, and most important, you're going to be elevated with a higher level of understanding, and that's what I call wisdom. All right? So that's my reply to you. Thank you very much for all of you who responded. Thank you very much, Eltin, Jacqueline, good to see you, Daniel, John Tran, thank you very much, Kelvin, and Hiram. Yeah, so with that, let's share with each other what is the latest food that get you through the morning and don't allow me get me through the night. And my wife packed this really nice snack. All the way from Singapore. No. Started from Japan, arrived in Singapore, and from Singapore I brought all the way to Boston. And this will be my snack for tonight. So it comes like this, really nice packaging, Japanese stuff, right? And my drink for the night, the place I'm living in is called the Tata Residence at Harvard Business School. Wow, our lounge is all the time packed with food and drinks. We have a fresh banana. We have apple. This is always available. Apple, oranges, and most importantly, my favorite. Oh my gosh, ginger ale called a Canada Dry. So it's really well stocked up here in terms of the facility, and I got a beautiful, I think I got the best room in the Tata Residence, all right? Penthouse level 7, corner unit facing the river. I think I'm very blessed. So let's enjoy our breakfast, and for me, my supper, all right? Okay, without further ado, thank you very much. I hope we're going to have a great learning lesson today. And first off, I want to start off by asking, are we at the bottom? And how do we know the telltale signs that we have hit the market bottom and that the market is ready for a rally? All right, so this is, I think, is really key. And with that, I did a simple search. All right, so let me show you what I've done over here. I simply go to Google and type in bottom CNBC. I'm not really interested what other media is talking about. I'm very focused on my CNBC channel. And here we go. We got quite a number of answers coming from the beautiful audience here at CNBC. So we have, first of all, Wharton Business School. Jeremy Siegel says the market bottom is in and a soft landing is possible. Wow, that is gorgeous, all right? And the second one, bear market bottom or false dawn, here's what one strategy says. Okay, that's so far so good. I think these are pretty good answers. And the third one is right over here. Boom. June was a market bottom. The second half of 2022 will be strong, says Wharton's Jeremy Siegel. All right, and he's the professor of finance at the University of Pennsylvania, Wharton Business School. That's where Donald Trump graduated from as well, right? So at one point in time, I was deciding how among the top universities in the US, which one I really want to get acquainted with. And I never looked back. I think I made the best decision in my life to enroll into the first business school ever built on planet Earth. And guess what? What is the name of this first business school ever built on planet Earth? It is none other than the Harvard Business School. All right, so I'm really, really proud right now. You see, I'm also wearing like my school uniform. This is my school uniform. I'm a student today, Harvard Business School. All right. Okay, so with that, we got to answer. Perhaps we have hit kind of a bottom of the market. But what are the telltale signs? We're going to learn from this very learned professor. And I got a video right here ready for you. And I want to make sure I play it out and all of us got a chance to benefit from it. So let me set this up. All right, here we go. So this is our professor from Wharton Business School.
Dudley, the former Fed official, Bill Dudley from the New York Fed, he was on yesterday saying that he thinks the equity market has it wrong, that the Fed is going to have to do a lot more tightening. You're going to take the other side of that. It's a tricky thing to fight the Fed.
It is, but yeah, I'm going to take the other side of that. I think that we will have maybe 100 basis points left. I mean, perhaps 50, 25, 25. I think you look at forward-looking sensitive prices, they are not going up. The only thing that's going up is going to be wages in certain sectors. Take a look at the housing industry, which was a major inflationary force in the last 2 years. The NAHB index, which was reported just a few days ago, I just looked at it. It has had the biggest drop in 6 months in its history. Only during the pandemic year, month of March 2020 to April 2020, did we have a bigger drop. If you go on the ground with real estate brokers, they say prices are softening everywhere. And remember, housing is 40% of the core index. Now, will you see that in the official statistics? No, because of the way the government does the official statistics, they put it in very lagged. So you're going to see housing prices continue to rise there. But on the ground, they're not. On the ground, the sensitive commodities, the real prices are not rising. And I think if the Fed takes a look at that, they will not have to go more aggressively. So I think the market has it right here. I think with the June is going to be a bottom. And I think the second half of the year is going to be quite good.
Oh, yes.
So basically, you think it's time to declare mission accomplished?
I would say, well, I don't forgive the Fed for overdoing stimulus, providing the government with all the money that they wanted, which is way too much in 2020, 21. But if you take a look at the money supply, which is what I do, very often, they brought that to a screeching halt. I mean, we've had virtually no increase in money in 2022. And, my feeling is, I actually voiced if they continue this tight, they would produce a recession. If they begin to loosen a little bit, not loosen in terms of rates, because that's built in, but not keep that money supply, the biggest slowdown that we have ever seen, begin to raise it a little bit, I think we might get that soft landing that everyone else thought was impossible. Not a sure thing, but I'm becoming more optimistic about that.
What do you think the odds are, Jeremy, that the Fed is listening and would go along with what you're suggesting?
I hope they listen to everybody. And I really hope that they realize, again, their past mistakes of money too loose. And now they say, we don't want to make it just too tight. One has to realize, that the so-called natural rate of interest, people like Larry Summers who said, we have to go way above 2.5%. We have to go to 4, 5, 6. My studies have shown that really interest rates have fallen the last 20 years around the world, and we're already above neutral in terms of that. So if we go to 5%, we're going to absolutely have a very inverted curve and definitely guarantee a recession. So they have to be cognizant that their 2.5%, which is their long-term Fed funds rate, under a 2% inflation forward scenario, is really too high. It should really be about 1.5%.
We're about out of time, but very quickly, you think that we have bottomed, that the June low was the bottom for the market, unless the Fed puts us into a recession?
Yes, unless the Fed, keeps on saying, oh my goodness, we're getting CPIs that are just too high, continue to raise. Again, we need some raising there. I'm not saying stop now, but if they take a very aggressive 75, 50, to, movement up to 4.5%, 5%, I think they're gonna be sorry that they've been so tight.
What a fascinating interview. I'm not too sure you are picking up the important key points. And what essentially it means is this. Number one, I think we are in for a soft landing. This is the best news that we can ever have. But our job as an investor is to cross-verify. How do we know we have point number two, a rebound at this moment? So if we have a soft landing, means that the market has hit a bottom, point number two. And point number three, since it hit the bottom, it should start moving up towards the end of the year, right? So we covered these 3 points, and now our job is to cross-verify the learned professor. Is he correct or wrong? So I'm going to show you my steps of how do we understand. Every time we watch something, we read something, we have to do our very own verification checks. And here we go. I'm going to start off with the Dow Jones Index, all right? So let me pull this up. This is the Dow Jones 30, the best 30 stocks as put into this particular basket. And again, what is really, really important is on the bottom left, we are looking at the year 2020, the start of the 2020, which represents the start of the pandemic, and it crashed below the 200-day simple moving average line, all right? So here we go. I'm going to kind of lead you over to what we should be looking at. And here we go. Dun, 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 dun. We start off from here. The market kind of hit all the way to the bottom because of the pandemic. And from there, it kind of move up. And then we enter into this period where it kind of moved down all the way to the bottom of the 30,000. And that's the reason why 30,000, which is a round number, is always a very, very important anchor. But what you get to see right now is the fact that, holy moly, it has broken above the 200-day simple moving average line right there, mama. All right, so this is the first telltale sign, and I'm not going to change the time frame I'm showing you here. I will simply, from here, I want to move on to S&P 500, which is the second key index that we need to observe. Dow Jones have moved above the 200-day simple moving average line. How about the S&P? Here we go. It has touched the 200-day simple moving average line. Beautiful. All right. Then we go on to the third important index, and that is the NDX, the Nasdaq 100. Now, so you can see the leader and the laggard and the guy in between. Dow Jones takes the lead. S&P just crossed the 200-day simple moving average line, and the Nasdaq about to cross. So what is even more important is right now I'm going to reverse the 3-step, 3, 2, 1. I'm going to set the same time frame right over here. I just put 2022 right in the middle of my computer screen so that we get to enjoy this moment. We have hit this bottom and ready to move up. All right, so that's called a rebound. Very, very clear. Then we reverse back to S&P 500. Here we go. Boom. And once again, we got this big rebound. Touched the 200-day simple moving average line. And we reverse back to the Dow Jones. Boom. Straight away, it not only touched, it went above the 200-day simple moving average line. All right? So I done this step on your behalf, truly. You should be doing this step at home, and that's how you're going to learn from me. And stop wasting time on gimmicky ads and gimmicky, gossipy videos out there. All right, I know there's a big storm cooking out there in Singapore, across to Malaysia. It's just filled with so many profanities, so many vulgarities. I say, wow, this is obscene. This is bad for the eyes, bad for the ears, bad for everything. And people love to watch. Yet, at the end of watching, you don't gain wisdom, you don't make money, you wasted your time. Right? Now, I can't help it, because every time I turn on my Facebook just to check anyone, notifying me of anything or messaging me, I've been exposed to this kind of gossipy ads and the gossipy videos, all right? So I say, wow, the world has changed. Okay, we have cross-verified what Professor Siegel has said. Now it is our job to really dive in to see, based on Q2 transacted data that is released. Now you guys have access to the software. For those of you who are new, very, very new to us, you can join us at spiking.com/pricing. And that's where, we have software as a service. You can get into our stocks AI, options trading AI, as well as our cryptos trading AI, all right? Now, without further ado, I'm going to go right now into our software and take a sneak peek, all right? I'll just show you what is really, really important. And then tonight, those of you who are with me on the Don't Stop Believing, you're going to have ding dong, ding dong, ding dong, ding dong. I mean, I'm not going to fire too many trades. I don't want to shock you. Typically, I reserve that for trade through the night. That I'll do on my own. And then I give you sufficient ideas for you all to fire off the trades. Tonight, in your opening bell, because right now, I'm in the night US Eastern time. All right, now for me it's 11 p.m. 16th of August on a Tuesday. Okay, so here we go. This is the way to go and look at the data. Check this out. So this is our really, really beautiful software, and I was just sharing with my classmates here at Harvard, and I say, hey, are you guys aware that there are stocks, they are like spiking 5 to 100% every single day? Holy moly. 5 to 100% every single day. And if we are not chasing this kind of stocks, we are wasting time, right? Because the market has already given us this opportunity every single day. Our job is to make sure we get in before the spike has taken place, all right? Sounds easy. Not that easy, because we need three things for this to make it happen. Number one, we need proprietary data. Number two, we also need a very unique approach to methodology and strategy to execute the trades. Get in, get out fast. And number three, most importantly, you need the sustenance of a community to back you up, all right? So I'm here looking at all these crazy stocks that's kind of spiking up, and then I'm going to navigate right to the page where I'm going to pay a visit to my teachers. Here we go. These are our very top 100 curated teachers that has taught me over the last 22 years in investing, ranging from Warren Buffett, Nick Schomer, Kenneth Griffin, Kenneth Fisher, James Simmons, and so on. All right. So for those of you who have access, I want you guys to look at the column under latest largest. All right. So kind of pick up the name among all these money managers, which is the stock they go in the biggest amount of investment. So you guys are very, very familiar with me already. Number one, we have Occidental. We've been trading this guy like crazy. We have Zylab, and Zylab is only taking in like it's a new purchase by Nick Schomer. We have a Woodside Energy, 141 million. And we have James Simmons putting 1.1 billion into Microsoft. M&T Bank, 140 million. ResMed, 283 million. And we have a AIG, 580 million. And NVIDIA receiving 310 million. Meta, 300 million. Discovery, 1.6 million. Applied Materials, 200 million. Domino's Pizza, 123 million. And so on, right? So these are all very, very powerful data points. And I want to give you a flavor what exactly that goes on behind the scene. And I come and take a look at our grandfather. Our very own grandfather. What is he thinking about today? Oh my gosh. What happened right over here? Crosswire. Okay, maybe they are doing something about. Let me just double check. Hope they know that I'm doing a live trading right now. Hang on in there. Need some help. So top 100. Okay, confirm my engineers are doing some work right now. I don't think they know that I'm doing live streaming. Hang on in there. Let me just fire off a few WhatsApp. Hang on in there, right? Okay, what's going on? Here we go. I'm in live streaming now. So I have to talk to my engineers and tell them, hey, dudes, yeah. So it happens, all right? Because we got our engineers all working remotely, different parts of the world, different time zone, and they are also jet lagged every day. I'm jet lagged when I'm up in the air, but our engineers are jet lagged every day, overwork. Okay. So I can't see the data right now. I'm blind. Oh my gosh. Yeah, I'm kind of blind right now. Hold on, let me see what they are telling me. Hang on in there, all right? Okay, let me try one more time. If it doesn't work, I have to use another method to show you guys, okay? Confirm they are pushing on the source code, so I can't do much on this. No problem, but I want to show you one interesting data point I saw, which I think it is important for us to take note, all right? And I think this is a great opportunity. So number one, here we go. Let's take a look at this article that kind of resonated with what I saw in Warren Buffett. Now, he has been averaging up on this particular stock. Averaging up means that, let's say his average price is $100 per share, and the stock price right now has gone up to 150 or 180. Now, if it's gone up to $200, he's sitting on 100% pure profit return. All right, so that's 2x. Now, at 100% pure profit return, it also means that why do you need to buy more of the stock? But if you are buying more of the stock without realizing its value, that is called averaging up. You have moved up your average price from 100 to maybe 110 or 120, depends on how much more you bought, all right? So we discovered this stock and we got really excited, and here we go. Let us all take a look at this interesting stock. And Credit Suisse says that Apple is a top pick and has double-digit upside from here. Wow, this is like a bold statement, and we want to understand how the heck they arrive with a double digit, and it's found right here on this paragraph. All right, here we go. In our view, Apple's installed base of more than 1.8 billion devices, number one, accelerates market adoption of the company's services and software offerings, and number two, creates stickier customer relationships with higher wallet share, which fortifies the company's ecosystem. This is mama. So as a result, they set a price target of $201 per share, which is 16% above where the stock is closed on Tuesday. Now, why don't they make it 200? Why don't they make it 202, which is more symmetrical, but they like to make it 201? I don't know what all these analysts are thinking. How can you be so precise at 201? You might as well make it my wedding day, 2002, 202. Right? So anyway, that's a different topic altogether. Now, if it's a 16% up movement on the stock, and I'm not satisfied with making 16% pure profit return, what must I do? I'm really thinking about using options trading as a leverage. Now, at 16%, For options, if we deploy the combination correctly or optimally, we are getting between 5 to 10 times more. So 10 times of 16%, 160%. Half of that, 80%. So I want to make between 80 to 160% pure profit return, which kind of resonate with a 16% stock price movement. Okay? But of course, easier said than done, because those of you who are watching right now, you are not trained by me in the world of options trading. You'll be scratching your head wondering, what the heck is he doing? How does it do it? I can only tell you, if you want to know how I fire off this trade, then you have to join us at the Don't Stop Believing trades notification, all right? If not, you can also learn from me in our online classes. So I nail this down and I say, wow, this is fascinating. And do I have the data to back up this price target? Now, I love to do this cross-verification check. And then I kind of go back and see, hey, is my Berkshire Hathaway ready already? But I think my engineers are doing some work right now. One last check, all right? Hey, it's back in action. I think everybody kind of alarm them and say, oi, boss is working now. All right, so here we go. This is a Berkshire Hathaway, and oops, is this still not working? Should be working. It's working right now. All right. So what I want to show you, as of 15th of August, Apple is still the apple of Warren Buffett's eye. Number one portfolio at 43.71%, which is humongous. All right. I'm going to click on step 2 and to kind of nail down and show you that Warren Buffett did average up, all right? And he averaged up by how much? $596 million of Apple. And I click on Apple, and we realize that this year he bought Apple twice. Holy moly. All right, he bought Apple twice, and this is really, really important to us because he has stopped buying Apple since the longest time, all right? The last time he bought into Apple, that was in 2000, way earlier than that, all right? That was probably in, 249. 2018, he stopped buying already, all right? So this time round, there is 2 purchases from Q1 and Q2, and thereby 894 plus 890 number of million of shares, which is the equivalent. What is important, the number of shares owned has resulted in him buying more than $1 billion right here. 600 plus 600, 1.2 billion to be exact, all right? So this is a very, very beautiful data. Now, once you've seen this data, we say, okay, how do I position myself for Apple then? And if teacher wants to deploy for options trading, then we really need to know his combination of the strike price and the expiration date. And I want to show you right now. Here we go. This is really important, and I will position it from 2021. Ready? Check this out. Dong. This is Apple right at this moment, and of course, some of you are kind of want to build yourself up. You say, wow, I missed this, I missed that. What you really miss is this V shape. All right, that's the V shape that you missed. Now, we've been trading kind of very, very frequently on Apple, and right now, with the analyst setting a price target of 201, what kind of a weird number is that, all right? So at 201, I'm going to move across, right across here. Okay, hang on a minute. Let me beautify my thing again. So this is the 201 line, okay? And if this guy wants to rebound, he'll follow this straight path that I'm drawing in front of you. And it will pass through exactly that, all right? This is the part I want to show you how I look at the candles. It will pass through probably by the end of September, all right? Easily. And how do I know that? Here we go. Oops. This is the part it will cross through. My expectation is about end of September. Okay? And if this is true, the most powerful way to leverage this movement is to deploy options. And what is the option I'm deploying? This is kind of only very, very privileged few get to know about it, and that's provided you become our Don't Stop Believing Trades notification members. All right. So I want to cover so much. That's it for today. I'm gonna fire even more trades for my own account. But typically, I think each time I can't come on live stream, we talk about one trade is more than enough. Tonight I got to finish reading up 3 journal papers. Cannot sleep early, alright? It's like after this, I'm gonna walk through the lounge and get myself some hot tea and survive the night. So thank you very, very much, all of you, for joining me. And before I go off, quite a number of you are chatting me already. Oh my gosh! So this is the one that if you're interested, you can scan the QR code right here, and you're gonna see how I fire off the trade on Apple, and I'll be firing off the trades on quite a number of positions just to take advantage of the data that we just received. All right. So thank you very, very much. I just do one last check for those on YouTube. Wow, you guys are really, really awesome. Stay true. Thank you very much. I see Christopher, Mark just came back, and Jacqueline, and hope you guys enjoyed today's session. Okay, have a great, great day, and for me, a great, great evening, and may God bless you. Good night, everybody.